We as retail traders cannot move the markets. Smart money, defined as banks, large funds, and institutions, they are the ones who are in control of the underlying assets direction. We simply wait for smart money to enter the marketplace through displacement and market structure, either a strong break to the upside or a strong break to the downside. That last up close candle in a bearish scenario or last down close candle in a bullish scenario before that change in market structure, either to the upside or the downside, would then be classified as our bullish and or bearish order block. And it's through these institutional levels we can not only anticipate the smart money footprints, but trade with the banks. Before we can enter a trade, we have to be aware of time. This is classified as a kill zone, which are specific times throughout the trading day where smart money enters the markets and volatility is most present. The three sessions we should focus on is 1. The London session kill zone between 2 a.m. EST to 5 a.m. EST. 2. The New York session kill zone between 7 a.m. EST to 11 a.m. EST. And 3. The London close kill zone between 11 a.m. EST to 2 p.m. EST. Between one of these times, whichever one you choose, should be the only times you should be trading. This is when volatility is most present inside of the marketplace. Now that we have that out of the way, a great tip is the higher the time frame we can identify the order blocks, the better, as smart money are entering positions on time frames like the weekly, the daily, the 4 hour, and the 1 hour. These will be the most high probability order blocks you will find inside of the marketplace. But when entering positions, I like to trade on the 15-minute, the 5-minute, and sometimes the 1-minute time frames during my kill zone. Before coming into the London session kill zone, I want to identify, have we made displacement inside of the marketplace following a break to the upside or the downside, leaving a last down close candle to which I can take a trade based off of that bullish order block. We can clearly identify before the London session we had this strong push to the upside, changing the state of delivery, meaning we went from lower prices to now pushing higher prices through displacement inside of the marketplace, anticipating smart money entering the marketplace, shifting the course from lower to now higher prices. Now that we've identified displacement inside of the marketplace and we're changing course, now we want to see, is there a last down close candle for us to then take our longs for that continuation to the upside of the new trend. We can see we have this last down close candle. When drawing up a bullish order block, we go from the lowest body to the highest wick. And now we want to see, can we retrace back into this last down close candle to find support for that continuation to the upside. We've then set our limit order as we tap into the high of this bullish order block, stop loss below the low of the bullish order block, and then we would put our take profits above these highs here for a 2-to-1 R. Let's see how it plays out. Price now tags us in. And we eventually reach up into our target for that 2-to-1 R. Very, very solid. Let's get into the New York session. Now coming into the New York session, we want to use London session as a frame of reference. We can clearly see that the London session has created a reversal and the trend of the marketplace has now shifted from the prior day seeking lower prices to now today seeking higher prices. So we want to trade in alignment with that daily trend. You can clearly see with the displacement inside of the marketplace from London session that smart money has entered the marketplace and we're seeking higher prices. Most likely the algorithm would want to come back lower into this last down close candle for smart money to then add to their positions, meaning as smart money is adding to their position, pushing the prices even higher, we can then trade with the smart money and ride off of the coattail of them moving the markets. So we identified this last down close candle, and if we can get a pullback down into this last down close candle, this would be a high probability trade as smart money is adding to their long position in that trend continuation to the upside, we can trade with the smart money and buy at these lower levels. We can see we put our entry inside of the high of that bullish order block, stop loss below that bullish order block, and put our take profits above these London session highs. Let's see how this plays out. We get that push to the downside, tapping into that bullish order block. Reaching up into our take profit for that 3 to 1 R. Super solid. Now coming into the London close, we want to do the same thing. We clearly see the trend of the marketplace is seeking higher prices. Now we want to identify that last down close candle, and if we can get down into that level, we will then take our longs for the highest probability trade idea. This last down close candle down here would then be our bullish order block. And if we can get that pullback during the London close into this level, this would be a very good trade to continue that trend. Coming into the end here of that London close, we unfortunately did not get down there, meaning there would have been no trade during the London close. Not every single day you're going to get a trade idea. It's important that you choose the right trade ideas, and the highest probability trade idea being very mechanical in how you trade and sticking to the same script every single time. We're looking at GBP USD on the 1 hour time frame, and we can clearly identify this higher time frame last up close candle before we got that strong displacement to the downside. So coming into the marketplace here on March 26th, we can clearly see the marketplace has came back up into that last up close candle. Now what we can do here is we see that we have a higher time frame bearish order block. Now we can go down to a lower time frame and anticipate a break from this higher time frame order block to the downside, and on that lower time frame, if we can get that lower time frame bearish order block, we can then take our trade idea. This is top down analysis, framing the narrative from the higher prices to then going down to the lower prices to then capitalize on the precision and the right execution. So let's go down into a M15 time frame. Coming into the New York session kill zone, we can clearly see that we have tapped into that H1 bearish order block and have seen displacement to the downside. Let's go on an even lower time frame, like the M5. Coming into the M5 time frame, we can identify our order block. In this scenario, we have two last up close candles near each other, so we're going to go from the bottom to the top here on the 5-minute time frame and extend out, and this would then be our bearish order block. So if price can retrace back up into this level during our kill zone timing, then we would then look for shorts targeting that London low. As price action comes back up into this last up close candle, stop loss above the high, and our take profit down here at these London session lows for almost a 3 to 1 R. Let's see how this then plays out. Price then comes up, taps us in. Then finally we reach down into that level for almost a 3 to 1 R. So that's going to be it for the video. I hope you guys like, subscribe, leave a comment if you guys learned something and enjoyed this video, as well as follow me on Instagram at Arkhamtrades. I'm replying to all my DMs if you guys need me. I'm Arkham. Be safe. I have released my private mentorship where I give daily lessons on technical analysis, fundamental analysis, psychology, risk management, as well as live trading and much more for your trading success. If that's something you guys wish to check out and want even more content and gems from me not shared anywhere else, it will be the first link in the description or the first link in my Instagram bio if you wish to follow me on there as well at Arkhamtrades. Thank you for watching.